Hey guys, welcome back to the channel, Eagle Trading. It is May 20th, 2020, 7:20 p.m. Another bubblicious day in the market. I think you guys know I've been pretty open and pretty straightforward on some of my technicals on the market. I don't really mix my determinations on which way the market's going. I assess the market based on what I see in front of me. I don't really use the economy. I don't really follow news per se. I don't follow what a lot of other technical analysts are doing. I kind of do my own technical analysis. And I think I've been pretty clear about the market in general, um, not chasing this market down if we have a pullback, not shorting the market, not believing in these head and shoulders, and looking at all the negativity on YouTube. It's funny because a lot of the guys on there they've been wrong so often that they put a question mark after their thumbnail or whatever their opening statement might be as to, did the market just double top? Did the market just triple top? Did the Dow just, hit a rejection level? Did we just roll over? Is the crash beginning? So I've been pretty open with you guys on what I think about the market. I don't put question marks after stuff. I'm fairly definitive. But I got to be honest with you. Today is the first time that I really can't tell you where this market's going. I really don't know. I came in today thinking that the market's going to hit this trend line on the QQQ that we made based on our channel charts. We also talked about the fifth leg being in play right now, and that we were in the fifth leg and the fifth and final leg before we have some type of a meaningful correction. And you can see in some of the Hekinashi candles that we look at, they kind of determine the volume weight averaging of the prior candle, which gives us some indication of direction that we saw the fifth wave beginning. We talked about this wave 1, wave 2, wave 3, wave 4, and then wave 5. Real clarity there. That's the great thing about the Hekinashi candle, is that it does not add in a mixture of red and green. It basically extrapolates information from the prior candle based on high and low and volume, and produces a second candle based on that information. So super clear, right? And usually the final wave is a shorter wave. So we have 6 green days here with 2 days of consolidation. I think we had 8 or 9 in this one with 2 days of consolidation. And then we had another 6 with 3 days of consolidation. And now we're probably looking at 3, right? Obviously 3 right now, but we're probably looking at 4 or 5 before we have a pullback and consolidation, which may have a continuation move depending on some of these some of the psychological factors. Some of the numbers are crazy. If you look at the retail investors that have been added to this market, I looked at a graph earlier, and I probably should have pulled it up, and I'm not too familiar how to do different screen shares other than Thinkorswim on OBS. My son tries to show me, but it's kind of confusing. But in any case, the amount of retail investors that have been added to this pool of traders, they just did one survey based on, I believe it was Robinhood or something, but the numbers were astronomical. The chart was off the scale, and that's obviously adding a lot of firepower. It's amazing to look at the guys like David Tepper, who are on pounding the table, saying that this market was the most overvalued market they've seen since, I don't know, the bubble market or tech stock bubble or housing market collapse. I can't remember what they said, but in any case, the smartest guys have been wrong here, and the V is officially in. This is the V. There's no denying the V is in. You see stocks like Facebook hitting all-time highs. I mean, would you say Facebook is in a better position now than they were, I don't know, 6 months ago? Well, on a price basis, they're in a better position now than they were 6 months ago. But if anything, you think that, with businesses being in the situation they're in right now, they're looking to tighten the purse strings, and the first thing they probably look to reduce is advertisement revenue. I must have drawn a chart on Facebook as well, looking for channel lines there. But we did break to all-time highs. I was kind of getting an idea of where Facebook might top out at, I guess, and I drew this earlier. But today was I was out of my zone today, and one of the better days in the markets in a while. I did talk about following the momentum stocks as they're probably going to continue to work, and that certainly was evident today when you look at the market. Stocks like Spotify, our shop.com, which we love to buy in pullbacks, these things continue to work, and it is mind-blowing looking at some of the moves that we've seen, and I'm almost feeling a little bit of FOMO. So I have to kind of internalize these feelings psychologically that usually it probably indicates we're close to a top here. When we say things like that, and when you hear that come out of my mouth and you're like, that sounds ridiculous because this market's never going to come down, that's also usually an indication that we're probably close to some type of a top here. It's hard to say, when I was, I traded through the internet bubble. I traded through the collapse of the housing market, the Lehman crisis, all these different things. And when you're in the bubble part of it, you don't see it. It's impossible to see it. You're just like, wow, this is amazing. These things are flying up. This is real. Everybody put a .com at the end of their company name, and the stocks just flew. And probably 85 or 90% of those companies are no longer in existence. But it didn't matter. They went from 5 to 10 to 20 to 100 to 200. But where this ends, I don't know. I just know that those end bad. I'm not saying Facebook's a bubble by any stretch of the imagination, but some of the price action that we're seeing in Facebook is very indicative of what we see in bubble markets. We just gravitate towards the household names, obviously. And quite the move there from 137 up to 229. We're looking at probably a 90% move from the bottom once we top out here, maybe an 80% move up the bottom. So looking for this channel to hit on Facebook. Extraordinarily across the board. Oil actually bumped up against my descending channel and kind of pushed through. So I backed away from my aggressive shorting on oil. Unbelievable as well, right? Shocking, some of the moves we've seen here, going from $6 on light sweet crude, and some of the futures contracts going negative for a while. Now we're looking at oil at $33 a barrel. Apparently there's a lot of pent-up demand. That's what the experts will tell you. We're in this area here, so it'll be interesting to see what's the high on this candle here, 33.75. Oh, we're kind of right there. I wonder if we tap that today. But I'll probably give it another shot or two. We're getting a little bit high on the RSI. And if you look at prior history before and we look at the RSI historically on oil, let's go back and see if we can't see how many times we were in the yellow zone and when we had pullback. So we got deep into the yellow zone on the upside, and that preceded a significant pullback. We got fairly deep in the yellow zone from the upside, and that preceded a massive pullback. We got into the yellow zone on the upside here, which preceded a decent pullback. Let's see, 66 to, 57, so maybe a 15% pullback. And we got into the yellow again here, which proceeded to grind higher, maybe with a sharp little blip to the downside. So we have not hit that zone just yet. Here's a little bit of a peek into the yellow too prior to this massive move down. But none of these moves had the type of move we're seeing in this short period of time from low to bottom. So what I would expect is that if we do peek up into the yellow zone, probably within this area in here, I don't know whether they're going to be able to clear this zone in this leg. It would seem that this zone would be pretty hard to clear without some sort of sideways consolidation before you fill the gap in oil. So I might continue to probe it, but I'm obviously not carrying anything over. Today I did a little bit of a short and was stopped out basically for a break even. But you can tell I'm a contrarian. I don't do so well in momentum markets. I can shift and adjust my my strategy for these type of markets and adapt pretty rapidly, because I am a trader intrinsically, so it's not a big deal for me to do that. But usually when I start to think in that manner is probably when the market's starting to top out, because it's between your brain and your gut that you have to kind of determine who's right. And usually the gut is what's telling you that this market is a little sketchy here, even though the brain's looking at the information saying we're going higher. So once you start getting those feelings like you've been left out, this can never go down, those are the kind of things that I look at for and being able to interpret that internally, saying that, okay, that's an emotional feeling that usually indicates some sort of a top's coming soon. But there's no doubt about it, this market's been extremely strong. And then anybody who's been short, I was looking at stocks like Zoom today, and I'm watching on my side screen CNBC, and there's a guy on there talking about how the stay-at-home stocks are overvalued, and Zoom is obviously one of those. And there's no moat specifically with this company with any proprietary technology. They just happen to be in a good situation at a good time. I don't know why these are taking so long to load, but I've started to look at the stock and watch the action of it, and it literally dipped down just a little bit and then fired all the way back to the upside. It could not get any motion to the downside. Even stocks like Baba, with the news coming out during the day on China, once again, I don't know why I'm loading so slowly here, but once again, the news out on China for Baba literally dropped the stock down rather quickly in a short period of time, but it recovered rather quickly in a short period of time. If you look at the intraday chart on Baba, you'll see that a move was pretty sharp to the downside, and then it kind of popped back up and then retested with a higher low, and then it started to grind back up against the VWAP again. This is crazy on my charts here. I really apologize, guys. But yeah, you can see the drop intraday there, and then they kind of pulled back and then back tested it with a higher low, and then they kind of pushed it up. It couldn't clear my Fibonacci until the close, and then in the aftermarket we're kind of just flattish, I guess you'd say, 216.90. It would be interesting to see if this can get back up to the little pivot area here at 218.10 tomorrow. It might have a difficult time doing that. The market needs a breather here to begin with, but I believe their earnings are coming out on Friday, if I'm not mistaken, or possibly next week. I'd have to look that up. But the market's crazy, guys, and there's no doubt about it. I wish I could tell you where I knew this would start to pull back. Watching the action today, it felt like the type of action you get on a little bit of a blow-off high, but I kind of feel like there's a little bit more to go here on this leg. We showed you on the Harkinashi candle charts that we're probably looking for 1 or 2 more up days to keep that green, and then we'll probably start to scale into some specific shorts, and maybe we'll pick on sectors that were weak prior to all of this movement and they're kind of being dragged up along with the averages, like the financials, which I don't expect will have very good earnings, and some areas of vulnerability for sure that we'll be looking at, and we'll go from there. But one thing of note was the company that was really starting to rock and roll in the after hours market, and we told you they would most likely do a secondary offering. I had a company, there it is right there, NNDM, and I was watching that last night in after hours. I probably would have done a nice little scalp trade if you could do stops in after hours with big blocks of shares, because I probably would have done several thousand shares. And since I could not do that, I was sticking away from it, and I did not enter a position. But what I did say was in the video that most likely this company will be issuing a secondary offering. So I hope you guys heeded my somewhat of a warning. And sure enough, what did they do this morning? They proposed a secondary offering of stock, and the stock proceeded to drop rapidly. I mean, it gapped down big time from like 450 into the twos, where I did buy some shares, as I said I would. I said, let's wait till it drops after that and we'll buy some shares. So I bought some shares and I sold it at 350 quite early, and I had a heck of a move after that, and now it kind of settled in. So I need to watch this over a few days to see where it kind of bases out at before we take another stab at this. But they sold into that. The day traders ran it up, and then the big money kind of sold it into the close in pieces. So it's around 294 in after hours, and we'll have to see how it acts over the next few days to kind of figure out whether this thing is bottomed out or not. That's about it for today, guys. I wish I had more answers for you. If we want to play the momentum game, I guess we can play the momentum game, but I'll have to kind of shift gears here and rethink my strategy to kind of give us some ideas on momentum plays. And I'm certainly not opposed to doing that if you guys are up for that, because it seems like that's the kind of market we're in right now. The reason I'm not going net short right now, even though I think that we are stretched out here and we do need some type of a pullback, is because with this type of market, the pullbacks are going to be bought. So for me, what's the point if I short the market and I can't get a continuation move on the downward move? I'm trying to time the market. But if I miss shorting the market and we get a pullback move, it's easier for me to go long the market from some of my pivot points than to complain and say, wow, I should have been short. I missed the move down. It's easier to do the if this then that. Like I said, wait for the pullback and then we'll buy it with obviously some structured stops and whatnot. We've done it before, I said buy the 279 on the SPY when it pulled back, and I'm sure a lot of other people were bearish, saying that we were going to roll over. Same thing with the perceived head and shoulders from the traditional technical analysis. I kind of warned that really wasn't the head and shoulders that we were looking at. But let's try to figure out where this thing's going over the next few days, and if we need to shift gears here and go momentum, we can certainly go momentum, and we'll try to find some stocks that are moving and some FOMO stuff to kind of be aligned with this bubbly market psychology that we're in right now. Like I said, where this ends, I don't know, but when it does end, a certain segment of this market is going to be absolutely smashed.